Broadcasting live from the Business Radio X studios in Phoenix, Arizona, it's time for Phoenix Business Radio, spotlighting the city's best businesses and the people who lead them.
Hello, Arizona. Welcome to the Lawgitimate Podcast with your hosts, Mike and Rochelle Poulton. This is where we share our legitimate perspectives on how to get ahead and stay ahead in law, business, and life. I'm Mike Poulton. I'm a business attorney and medical malpractice attorney here in Phoenix, managing partner of a small four-attorney litigation firm. And this is my lovely wife, Rochelle. She is with her own practice, X Firm, and with AZ Own It, a real estate group. And we're here to talk to you today about all kinds of law, business, and life stuff. But we have with us two excellent guests who are experts in tax matters, especially for small business owners. So once we get into the heart of our program today, we're going to be talking to them about a whole bunch of tax stuff, which, if you're like most of our listeners, you find incredibly fascinating and you're really looking forward to it because those are the kind of people who listen to our show. Welcome. You're our peeps out there loving the small business tax talk.
Exciting times.
Yes.
Really looking forward to it. But first up, we've got the rackets. And this week's rackets is, of course, talking about fake tax shelters. So if you're out there and you have a living trust or you're looking into it, or you're looking into any kind of tax shelter where the laws are relying on 1800s case law, you might be in trouble. So there was a huge scam that went around and is still going around the valley for living trusts where people relinquish their driver's license and all sorts of things. And it's weird. The whole IRS has an entire webpage dedicated to debunking these myths.
It's kind of connected to the sovereign citizen thing, from
Yes.
what I understand. It's important to note, I would say, that living trusts are not necessarily part of a tax scam. There are all sorts of reasons to have trusts. Some trusts are called living trusts. They also have other names. Plenty of perfectly legitimate uses for those types of legal vehicles, including for estate planning purposes. However, they are not going to save you from any income tax or estate tax liability. The law is specifically set up to deal with that situation. There is no loophole that actually works there. It's not going to happen. So if you're thinking about some kind of an arrangement like that for the purpose of avoiding taxes, that is almost certainly not legitimate, and you should probably not try it.
Yes. And in case you forgot or you don't know, the 16th Amendment is what says that there is an income tax. It's already there. It was early on. So hope that debunks any weird myths that are going around right now in the Valley. And next up, the LBL moment.
The LBL moment. Well, that was the L of our LBL.
No.
This is the B of our LBL.
No,
oh,
ramifications.
Yeah. Oh, ramifications of the, I'm getting all out of order here. Rochelle knows what's up.
I do.
Okay, yeah, Ro, go for it. Tell people.
Today's law moment is about the ramifications of not filing a tax return. It is kind of a big deal. Eventually, you will need to catch up on filing. There's two things that are certain in life: death and taxes. The IRS will eventually audit you. Also, if you have a lot of tax liability and that's what you're avoiding, well, you have to know that in bankruptcy, you can't discharge back taxes unless you filed a tax return. It's not okay to let the IRS file one for you. It's okay if they did, but you need to go ahead and file one on your own. So just make sure that if you haven't filed a tax return, you consult with a tax professional to get caught up. I assure you, it is never as bad as you think it is, and there's always time to catch up, even if it's been a decade. I see it.
I do not assure you that it isn't as bad as you think it is, but I do assure you that it's only going to get worse unless you deal with it.
All right, the business moment's all you, babe.
Oh, geez. Okay. LLCs versus corporations. So I get calls all the time from either new business owners or experienced business owners looking to form a new entity. And these days, most people know to go for an LLC first, that it's kind of the standard option for what kind of business entity to form. And in 90+% of instances, that is going to be your best choice. However, you could still form a corporation. Question is, why would you want to? And the answer is you probably don't. Usually, there's no real advantage to forming a corporation over an LLC. In the past, that was not the case. In the past, there were vast differences that were important and some particular advantages for corporations. No longer really the case, with a few very specific exceptions. One of those exceptions would be if you're looking to go public, or if you're going to be selling interests to a large number of investors, even if it's private. In those instances, it can be easier to deal with a corporation rather than an LLC. The corporate finance traditions are more well suited to that type of an investment approach. But the reality is that these days, those sorts of arrangements are done with LLCs all the time. You do all kinds of workarounds in the paperwork to create something that's very much like a share of stock, but is in fact an ownership unit through an LLC. So, even that difference is disappearing. Bottom line, you're probably going to be forming an LLC. And if you need a corporation, you probably already know that for sure. And you're probably a pretty sophisticated business owner, pretty well versed in business finance. Otherwise, you're going to be going with that LLC. Yep.
Saves you time, money, and of course, administration.
Yeah, much simpler, much more straightforward. In Arizona, at least, and this is different in all states, but in Arizona, LLCs do not need to file annual reports, do not need to have a board of directors. You file it once and it's pretty much perpetual with very little maintenance required with the state. Corporations do need to have a slate of directors, do need to provide annual reports, which include some information you might not want to disclose, all kinds of stuff. The differences are things to talk about with your business attorney when you're planning this.
All right. And last but not least, the life moment for today.
Life moment.
Enjoy your family virtually.
Unless they're right down the street and you've been hanging out with them every day. But I don't know. We're kind of thinking travel and gatherings, not worth the risk. We're not doing it.
No. But NAU is, or is it Grand Canyon University?
I think it was Grand Canyon.
GCU is offering students a opportunity to take a full-size photo of themselves.
And head-to-toe photo. And then
a cardboard cutout and send it to your families in lieu of you traveling back home for the holidays. So Mike and I are thinking that might be what we send my dad.
Yes. A life-size photographic cardboard cutout that can be folded to sit in a chair at the Thanksgiving dinner table. It's a pretty great idea. And I think GCU was only charging their students like $20 for it.
So if you're at GCU, do it. Duh. Totally. That's awesome. It'll be a lot of fun. All right, but now on to the fun part of the show. Our guests.
Welcome.
Thank you for having us.
Happy to have you. So first up, we've got Arizona Tax Advisors, Suzy Greenwood. So please tell us all about you.
Well, Arizona Tax Advisors, we're full service accounting and bookkeeping. And of course, we do taxes. A lot of taxes. Part of what we also do is to educate. We work with a lot of small businesses and people who are just getting, and they have a great idea now it's going to make money for them, or they had that great idea a year ago and it's already making money and now we're catching them on the tail end of that. But at some point they need to know how to set up their systems and have everything in place so that they're ready for their tax year and then ongoing for their bookkeeping and record keeping. Education is a part of all that we do, and one we're pretty proud of. So that's us. We're small. We're locally owned. We're here in Tempe, Arizona, and we love taking time with our clients.
Awesome.
Excellent.
All right. And Shauna Wekerlien, the tax goddess. Tell us all about you.
Well, goddess, right? Hi, everyone. So my name is Shauna, the tax goddess. Much easier than trying to pronounce my last name. I own an all-digital CPA firm, but we specialize in tax strategy. So we typically work with 6, 7, and 8-figure entrepreneurs to reduce your taxes, grow massive retirement accounts, pay for kids' colleges, buy a yacht. We just helped the client buy a $1.8 million yacht. So these are the types of things that we help do. And of course, ensure that all of those tax programs are done legally. None of this under the 1800s law, not deductible kind of stuff. So we specialize in tax strategy, and we're an all around the globe company. We're currently located in 7 different countries. So happy to help anyone in the U.S., typically U.S. clients.
Excellent. Well, we're very glad to have you today. I know Rochelle has talked about both of you and talked about taxes with you. I hear your names pretty frequently around her office, and it's good to have you on the show. Very nice to meet both of you over the internet today. Well, we've got a whole number of topics to talk about, But I figured I ought to ask both of you about the LLC versus corporation thing we were just discussing, because there are specific tax implications on that too, which I didn't even mention. I don't advise my clients on tax matters. I know a fair bit about tax because I have to, but it's not a part of my practice. I'm not a tax attorney and I'm not a CPA. So typically when people are asking me about taxation for different business entity types, I tell them about SCorp elections and that whole situation, and then tell them this is something to discuss with your CPA in detail. They will advise you whether you should elect SCorp and when. But I'd like to hear what your thoughts are on formation of corporations these days versus LLCs. What are you seeing and what are your thoughts?
Well, we're seeing LLCs more so than corporations. As you said, it is rare that you need to actually form a corporation. There are some tax advantages for certain situations, but it's a very specific situation. We work a lot of sole entrepreneurs and solopreneurs and small businesses that are the LLCs, and actually teach them how to do that, how to go about, becoming and being an LLC, because it still gives you that pass-through taxation as opposed to the double taxation that a corporation gives you. And that's one of the things a lot of people don't realize is that as an LLC, those tax dollars are going to pass through to your personal return, and you do not end up paying both as an owner and as an investor. So yeah, we are doing more LLCs.
Yeah.
And on our side, we're seeing both. And the answer in my world for tax strategy is always, it depends. What are you trying to get to? So we see a lot of corporations when it comes to using it for insurance companies or gifting, or for example, building family assets, growing estates and legacies, those kinds of things. We'll see C-Corps for that. We will see LLCs for flow-through businesses. And one of the things that personally I love about an LLC is that the LLC can choose, does it want to be the sole proprietorship, S-Corp, or partnership, those flow-through methods, or does it want to be taxed as a C-Corp? So it can actually choose. It's one of the most flexible, as you said, one of the most flexible entity types. And, it all depends on where you're trying to get to as to which choice you should make. So,
well, it's very interesting that you mentioned the C-Corp election option. I work with tons of people who have LLCs where they've elected S-Corp, but I've never actually run into someone who has elected C-Corp that I'm aware of, although we all know it's out there.
sure.
Is there a circumstance where that's favorable? And is there a way you could describe to people just briefly when they would be electing C-Corp?
Absolutely. So let me give you one of my personal favorite examples. One of the code sections in the IRS or with the IRC, Internal Revenue Code, is the 1202 and 1204. And I promised all your listeners I will not talk tax code. Okay, I'm just giving you numbers so you can go look them up. Right? But the 1202 and 1204. This works really, really well if you are in a business that is not a personal service business. Okay. So for example, as attorneys, as CPAs, we are the service. We are the person that is the service. The 1202 and 1204 is not really going to be a good option for us. But if I were to build a widget, and what I'm doing is selling my widgets, a company that I use the 1202 or 1204 in regards to, whether it's an LLC or an Inc., taxed as a C corporation, in 5 years and 1 day, I can shut down that company, and any earnings inside that company, any earnings, 500,000, $1 million, 10 million, are not taxable at all, period, zero. So again, it absolutely depends on what you're doing, what kind of business you're doing, how much money are you making. When you start getting into larger numbers, over 10 million, it's not really going to help you that much, but it's still 10 million of tax-free income. I'll take that every day. So again, the answer is it depends.
That is very interesting. So you would be able to form a corporation, C Corp, or elect. Can you do this by electing S Corp for an or electing C Corp for an LLC, or does it have to be a corporation?
Either way. So the newest court cases that are coming across for this particular code section, you can be an LLC taxed as a C Corp, or you can be an Inc. taxed as a C Corp.
Interesting. So then the earnings that you're talking about that could be held within that company will have been taxed once at the lower corporate tax rate. But then if you shut down the operation, you can distribute that to shareholders and it's not taxable as income the second time around?
You got it.
It's a heck of a deal.
gets around the double taxation. Double taxation has been a serious problem in the C-Corps for years and years and years and years. And recently in 2018, with the TCJA Tax Act, the C-Corp corporate level tax rate dropped to 21%. So a significant savings, especially if you're making really good money. If your personal tax rate is already at the highest 37, with Biden in now, maybe 39.6 coming tax rates, that's a big shift, right? 21%. So of course, nobody knows what's going to happen with the tax laws in the future. There's a lot of discussion about that C-Corp tax rate going back up to 35, 37. But in the meantime, enjoy it while you can. I'll take 21% over anything else every day.
Very good. That's interesting. Well, this is the reason, dear listeners, that you got to work with both an attorney and a tax professional to optimize your whole business setup. There are a lot of ways to reduce your tax burdens, reduce your regulatory burdens, getting this stuff set up. It's something a lot of business owners just don't want to spend time thinking about. Aren't really prepared to dig into. And that's why there are people like us and like Shauna and Suzy.
Duh.
And I was about to say, Mike, one of the benefits here, and I think that's something I'd like to bring up if possible here. There are actually multiple different people. It's not just technically one CPA, right? Suzy here specializes in bookkeeping, in tax preparation. I specialize in tax strategy. It's a completely separate field from each other, right? The person that prepares your tax returns not always is looking at every single code section every single day, like some crazy people. So there are actually two sides to that CPA work. And a lot of people just don't even realize that a strategist even exists, right? It's kind of like you two as attorneys, you've got two completely different specialties, same thing. So
Absolutely.
Pretty cool.
It's true.
It takes a whole team to make a business run properly.
And when you're looking at, 7 figures, take the time to do it properly.
Mm-hmm.
If you're paying 40%, under the new proposed laws, right, we're talking California is going to pay as high as 62%. 62. So, so do you really want to just write a check to the government, or would you prefer to make a call first before the end of the year? Make the call before the end of the year. Make the call first, see what you can do, see what you can strategize, and then pay your taxes after all the strategies. Much better option.
Definitely.
Agreed.
And if you're planning a new business operation and you're going to divest part of an existing business, spin something off, acquire something, whatever you're going to do, it pays to consult with your professional team first. Get them all in place, come up with the strategy, and then execute that strategy rather than strategizing as you're going along once you're already partway into something.
For sure.
Well, and the other part is people don't like to talk about money. They don't want to talk about, but how the business is running. They want to talk about making that gadget and what it goes in. They don't want to talk about the numbers because it makes them nervous. They just don't know. And part of what we want to do is we want to remove that fear factor, if you will, so that it might not be the most fun thing you ever do, but at least know, when you're walking into your accountant's office, that you're not going to need to go have a cold adult beverage as soon as you're done. Or you need one before you even come in.
I'm thinking 2 redheads and a cold adult beverage and the taxes sound great.
Now, actually, that could be an exceptional plan. I like it. Yeah.
I like
it.
That's too funny. I do think, for dealing with tax planning, a lot of people are afraid of the term, so what goes into a tax plan? What are like the top 3 things that you guys are looking at?
Mind if I go first, Suzy? I have my favorite answer, my absolute favorite answer. Listen, guys, there is a scale of aggression. Okay. So I'm gonna pick on something Rochelle said earlier, right? Talking about, these living trusts and we don't have to pay taxes, the 16th Amendment, all this kind of stuff. Okay, let's talk about the aggression scale here. So the aggression scale goes from 0 to 10. 0 means the IRS never calls you, never ever. Okay. 10 means we're all going to jail. Okay. So where do you think, right? Yeah. This is a really important question. Okay. Because where do you think these living trusts and 16th Amendment doesn't exist? Whatever. You're on the 10 end, and that's nice. I'm not the right strategist for you. I'm pretty sure Suzy's not the right CPA for you. You have fun in jail. We like our freedom with our glass of wine. Thank you. Okay. Now, the reason why I'm saying that this is such an important question, really, and it's something that I believe that every business owner, every taxpayer should think for themselves. Some people want to be at a 0, a 1, or a 2. They would never even dream of jaywalking. They're a -3, okay, on that scale, all right? Then you get other business owners that are like, I'm a 20, and you're yanking them back, right? Like under the level 10. So it's super, super important for any tax strategist, for any CPA, to know where you as a client want to be, okay? I'm trained at an 8. I'm ex-KPMG. I've done strategy all my life. Like, this is what I do, okay? But if you tell me you want to be a 2, okay, I'm going to walk over to this level 2 scale because that's where you want to be as a client. So that's a big, big, big question for me that as a client, as planners, we need to know where you want to be and where you're trying to get to, right? If you're at a 2, but you want to put away $50 million for retirement and buy a yacht, it has to kind of get you over to like a 4 to kind of help you get to that, okay? So, there's a conversation to be had about that and about that aggression scale before we can even start digging into who you are, what you do, what are your goals, what do you want, right? Do you want a yacht or you just want a cabin in the woods with some Wi-Fi? I don't know. What do you want? Tell me what you want and we'll make it happen. So
that is a fabulous answer.
I want a helicopter to take me from my yacht to my cabin in the woods.
Where are you on that scale? Are you like a 12? Is it?
I'm a 2. I want the IRS off my back when I'm on my yacht.
So it really just depends on the person from my perspective as a strategist, right? Who are you as a client, as a taxpayer? Where do you want to be?
Well, it's very interesting that you have that aggression scale. I think that applies in fields beyond tax. I certainly envision things similarly with clients. A lot of business people look for advice from attorneys, which really is business advice more than it is legal advice. And what I end up doing is explaining what the range of options are and what the probable outcomes from them are and the relative probabilities of success and failure, and how much are you going to piss off somebody who might sue you? How likely is it that you'll end up getting drug into court and having to spend a bunch of money on it? Versus how aggressive do you want to be about this? And often the good business decision is not the aggressive decision. But some people choose to pursue the aggressive approaches anyways for a variety of sometimes good reasons. Sometimes it's well beyond just personality. Sometimes you need to appear aggressive in order to deter other people later.
So you need to be at an 8.
Yeah,
not a
sometimes. 10. Yeah. So I haven't used the 0 to 10 scale. I like that analogy.
Steal it.
Definitely. I may steal that one from you. But that applies to much more than just tax. I think thinking about your spectrum of aggression is an important thing in business.
I like it. All right, Suzy, what about you?
Okay, so what we want to do is when we're going to sit down with a client, yes, we want to know what their goals are, and yes, we want to know what they're currently doing, and we want to know where they want to go to, where they want to be. And then a lot of times, quite frankly, the people that I'm working with don't even have the basics to get started. And so you might think of us more as the elementary school and high school level, and then we would send them to Shauna for their college. There again, you've got that team aspect of things, because it's absolutely true that people will come in with these crazy, wild ideas and have no clue, which is fine. That's why we're here. But I constantly am amazed that they've gotten as far as they have without looking at some of the other things or understanding some of the, strategies, as you say, behind even starting a business, keeping a business, or doing taxes. A really funny one, too, I was going to bring up, speaking of interesting things that have been going on, and I wanted to throw this at Shauna, ask her, too. When the stimulus checks came out this year, did you get a rush of people wanting to file tax returns for multiple years and that kind of thing now, because that's a big piece of getting that stimulus check and getting caught up and knowing that there may be more coming. We certainly saw a lot of it. And again, that was where working with people and helping them understand that, yes, it might not be as wonderful as we would like to paint the picture to be. There will be some struggles along the way, Mike. You're right about that. But it's just going to get worse. It's just going to get worse. And usually it's not nearly as bad as they think. That's probably the big thing. So what did you see in your business where that was concerned?
Well, talk about not only the stimulus checks, but of course also on the business end, the PPP loans, the EIDL loans. Normally I've got a YouTube channel. I film a YouTube video 3 days, every 4 days. I was literally filming 3 videos a day. Well, now the law is this, and now the law is this, and don't do that, what I just told you this morning, because that changed. So do this thing here. So it was a little bit of a mess. Not surprising. COVID, in my opinion, we're just wiping 2020. It's gone. The year is gone. Rochelle, keep this video up because this video is awesome. Otherwise 2020, but yeah, I mean, it's a very, very, very scary time. And it still is, even now, because if we look at, for example, the SBA, sure, we're going to give forgiveness, but like, we're not sure if it's this form or like that form, or maybe it's this page or those weeks. Seriously, like, I'm trying to run a business. How am I supposed to run a business and pay attention to what's happening with the SBA? And I'm talking from a client perspective. So we're still, even now, receiving telephone calls. Shauna, okay, so who's the president? Well, we think maybe Biden's the president, we think, and the Senate, we're pretty sure it's going to be Republican. We don't know. We have no clue. Okay, so there's a lot of unknowns. And I really do believe, kind of going back to what you said, Suzy, mindset is everything. Okay. So for business owners, for anyone out there, keep your mind focused on what it is you're trying to do. Are you trying to grow your business gross revenue? Are you trying to grow that bottom line? Are you trying to train your staff? Are you trying to survive? Survive is an okay thing right now. Just survive. Okay. That's any of those things is perfectly fine. And so if you've got the team that you can ask questions to, do you think I should be trying to push for more revenue? Should I hire back this person? Should I just survive? What should I do? You don't have to do this alone. You have a team. That's the whole point of having a team. Anyway, sorry, I just went off on a rant. I'm sorry.
That's what we do on this show.
We rant. Absolutely ranting.
So one more quick question, if I may. We are seeing, of course, people now coming in saying, okay, so I got the PPP loan, and now I'm getting my forgiveness application from my bank. And so what should I do with this? And how should I go about this? And, the discussion just came out about deductible expenses that are covered by the PPP loan monies. And that, okay, so are you seeing that same trend where you are?
Yes. So let's back up. So what Suzy's talking about, for anybody that doesn't know, okay, if you got a PPP loan, all right, so the PPP stands for the Paycheck Protection Program, all right, as long as you spent that money on payroll, rent, utilities, and or mortgage interest for your place of business, you were allowed to basically it was going to be free money. They were going to forgive the money. Now you see me doing air quotes because nothing from our government is ever free, okay? You hear the term free coming out of our government's mouth, assume that there's a tie-in somewhere, okay? And I think that's really what happened to a lot of the business owners is they got the media blitz of, oh, look, the government's handing out free money. What they didn't get or didn't even realize that maybe they should have asked is ask your CPA, what's the string? What's the catch? What's going to happen? Now what we're seeing is, okay, all of the banks, you're getting your forgiveness. The banks are saying, yep, you're approved for $20,000, $40,000, $50,000, $200,000, $500,000 worth of PPP forgiveness. The CPAs are now coming back to the clients going, well, that $500,000 is now taxable, right? Yeah, the business owners had no clue. Right. None. And I think that's the biggest source of anger. I'm not sure what else to say right now because, the business owners are already feeling completely downtrodden. They don't know what to do. They're barely surviving. They got this loan. They thought, oh, yay, I can continue to pay my people for 6 more months. Maybe it's enough money for that. Maybe I can keep my doors open. Heaven forbid, the state governments haven't actually shut down their ability to even perform business. And yet, by the way, now there's going to be a $500,000 taxable income item. And I'm supposed to pay that how?
Correct me if I'm wrong. You can't use PPP loan money or EIDL money to pay your tax liability from obtaining forgiveness on a PPP loan.
Yeah, so definitely keep those. Sorry, Suzy. I was going to say, definitely make sure you keep those two things separate. The EIDL loan is one thing and the PPP is another, right? The only one of those two that has forgiveness is the PPP loan, right? That's it. The EIDL does not have forgiveness. It's a loan. It's money. You're going to pay it back. Like, that's a loan. Okay. PPP had to be spent. The only way to even get forgiveness was payroll, rent, utilities, and or a portion of mortgage interest. That's it. So paying your tax bill, yeah, right. Nope. Now there's some arguments coming in, and Suzy, my turn for a question for you. There's some arguments coming in the tax world saying the EIDL loan is a loan. You do have to repay it. So it's like any other money. Like you got a loan from the bank, right? A loan from your parents, whatever. You got a loan. Okay. There's some arguments with relation to the EIDL because it was supposed to be used on ordinary and necessary bills. Okay, so your cell phone, whatever, office supplies, whatever it is, ordinary necessary bills. Is the tax bill not an ordinary and necessary bill? I don't know. Okay, this is where we're like, there's a lot of arguments, and this is why one of the reasons I think people are so darn frustrated because they're getting zero guidance from the SBA. The SBA is listing, here's 5 updates. Well, those are the questions we asked you like 6 months ago that we wanted answers on, and we're way past that now. So. Sorry, so Suzy, I would love to hear your opinion. Do you think that we're going to be allowed to pay the tax bill with the EIDL funds?
No. I think, no, you have to keep the monies separate, and I think that we're all going to run into or several people who weren't prepared for it are going to run into a situation where, in fact, they simply have more taxes to pay that they didn't count on having to pay because this is all different understanding. I'm still not sure that the legislation even understands or knows whether they meant it to be forgivable money. And I do want to throw in for some people who did get the EIDL, there was a $10,000 grant that was an emergency grant that was given out early on in the program. And if you got that and then you applied for the Paycheck Protection Loan, then they would transfer that grant money over to the Paycheck Protection Loan. So when you say that the EIDL is not forgivable, not in its purest sense, but if you did get some of the up to $10,000 grant money, then don't panic. That might be forgivable for you. Again, it's how you spent the money. And then here's the other part of it. Are you a business, as in a corporation, or an LLC, a sole proprietor? If you're a 1099 employee, right? How does all of this apply to you? Oh my gosh, there was so much confusion out there for some of our really small business owners that had no idea how to go about even applying for assistance, and talking to their bank wasn't helping them because the banks were confused. So, hello.
Or closed.
We had people, what really caught me was that we had multiple businesses, not just one. We've had multiple businesses get multiple PPP loans because they went to their, this is a whole nother, just wait until the lawsuits start here, okay?
Yes.
They went to their first bank and the bank said, oh, well, you don't have a checking account or you don't have such minimum balance. You haven't been with us long enough, whatever, right? The bank gave some sort of excuse. Okay, but they already submitted the application to that bank. So they left that bank because they said no. They went to a different bank, got the PPP funds. 6 weeks later, now all of a sudden magically they have another loan from the original bank because the original bank also wanted to get there's a whole bunch of backgrounds and fees and stuff that the banks earn and all this kind of jazz on the PPP. Yeah, so now people have double the money. We got problems. There's a lot of weird stuff going on in here. So I think really the baseline, we could go off and rant about this for the whole hour. The baseline here is, guys, if you are not working with a qualified professional, if you're not working with your CPA, if you're not working with a strategist, if you don't have an attorney, like, get your game, get your team, and get them organized and start asking questions. Because if you're not asking questions, you're going to shoot yourself in the foot when you owe more tax. The SBA comes after you for taking double dipping on the loan when you didn't even do it. I mean, there's a lot of problems. Make sure that you're above board and you're at least asking the questions to come across as an honest and above board taxpayer. Because if the SBA thinks you're not, they have specifically in writing, said that they will go after people on felony charges for this kind of stuff when you didn't even do it. So yeah, get your game organized.
Okay, so I agree with everything you just said. The one thing I will add to that is there's a phrase that we've known for years related to a totally different subject. It's called just say no. And if you are a consumer or business owner and you all of a sudden found yourself with extra money somewhere, you better be asking where it came from and just say, no, I don't want that in my bank account, because you're right. Double dipping is going to come back to bite them every time. That is not a good strategy, folks. The other thing that is not a good strategy is, and I'm speaking your language now, so forgive me. I'm speaking in terms of accounting too, though. Is not a good strategy is if you can afford to pay your rent and you can afford to pay your business expenses and you're deferring just because you can, watch out. That's going to come back and get you. And all of a sudden you're going to owe so much more. And I've seen it happen with businesses who weren't even people that weren't thinking. And then the other thing is, and I just lost my train of thought. So there I went. Oh, that's terrible. I got on a roll and I fell off my soapbox.
Well, those are darn good things to
They're
remember.
really good points.
And your point about suddenly getting an unexpected bunch of cash that you know is not really yours, that's something that comes up with attorneys all the time. You know, I get a call probably once a year from somebody who has gotten themselves into some kind of a situation because they're in possession of a bunch of money they weren't supposed to have, whether it was somebody else's money that they're holding for some reason, or a bank error like you're talking about where funds are put into someone's account where they don't belong. And from the attorney or tax professional standpoint, that just makes our hair stand on end. That is not a good problem to have. Suddenly coming into possession of a whole bunch of money that's not really yours, that means that you are responsible for the safekeeping of that money until it gets back to the rightful owner. Doesn't mean it's yours. There's no reason at all to think that that's your money just because it showed up unexpectedly in your bank account. That means that you've got a real problem to deal with until you get rid of it.
I see this with security overpayments too. You know, people randomly accidentally get large deposits and it's like, just say no and send it back. Like, don't hold on to it. Don't spend it. Dear Lord. Like, it is a real thing. And I know it happened with businesses in the PPP loans and EIDL, whatever. They got sometimes accidentally 3 or 4 deposits from them, you know, and it was an accident. And it's like, that is not your money. This is not Monopoly. The bank did not make an error in your favor, man. Like, you are screwed.
I was just about to mention the Monopoly card. You know, everybody thinks, ooh, bank error in my favor. Nah, it doesn't work that way. It never worked that way.
You always have to pay it back with interest.
You could pull the other Monopoly card, the go to jail right now card.
Yes.
That sounds like fun.
Those two cards are closely related in real life.
It's pretty terrifying stuff. So what are the top mistakes that you see people making right now in regards to tax planning, other than simply not doing it?
Not doing it. You know, I think the biggest thing from my perspective is they wait too long. Like Suzy brought up that, you know, people are afraid, right? And they could be afraid for 1,000,001 reasons, right? They don't understand. They had somebody burn them in the past. They're just, I don't have time right now. I'm busy, right? Okay, listen, there's not a lot that I can do. If you call me on December 31st, one, I'm going to have a glass of champagne in my hand. So your strategies are going to be a little like, I don't know. Okay. But two, you know, there's no time. There's no time to make adjustments. As a CPA, right, when you're filing tax returns, you can only go into the previous year on a couple of items, just a couple of items, right? So perfect example, traditional IRA, Roth IRA, you have up until April 15th of the next year to make that contribution, okay? But that's like, there's like 3 strategies that work like that. We work with over 360 strategies, but if you don't call me during the year and you call me after the year's over, not a whole lot I'm going to be able to do for you. So I think the biggest mistake that I see people do is they just wait. They put it off. I can get to that next month, next week, next whatever. And side point, because we have pending political changes to the tax system, those changes at this point could be deadly, like upwards of 20 to 25% deadly. So not the time to sit around and wait if you think you're making any kind of money at all. So.
And if you're not making money, it's also not a time to wait, because there are a variety of things you may need to do to prepare for making money in the future, so that you can carry forward your losses and deal with all of the bullshit you've been putting up with in 2020 with your business as smoothly as possible and with the least expense going forward. But boy, does that take a lot of planning.
Yeah, the NOL carry forwards, which is what I presume that you're angling at. The NOL carry forwards are one of the coolest things that came out of COVID from a tax perspective, of course, but one of the coolest things that came out of COVID. So yeah, we've got clients that, just because of COVID, we're now losing $500,000 a year.
Right.
We've got those negatives down to $1.5 million loss, all valid expenses, all above board. That negative 1.5, in one case I can think of, is actually being carried backwards to a 39.6% tax bracket. They're getting 40% back on their money on $1.5 million because of planning. That's it. That's the cool stuff. So good. Sorry.
Do the cool stuff.
Do the cool
Do
stuff.
the cool stuff, yeah.
What about you, Suzy? What mistake are you seeing?
Oh my goodness. Again, I work with smaller businesses and individuals a lot. And so I see some things that people it doesn't even click in their brain not to do it. For one thing, I'm constantly seeing commingling of funds, which simply means that they are running business expenses through their personal accounts and personal expenses through their business accounts. And especially when I'm setting someone up in a new bookkeeping system and they come in and they say, everything on my bank statement, because that's what I base it on. I would love to be able to base on everyone's memory of what they spent money on, but we don't do it that way. We actually base it on facts. And when I'm looking at that bank statement, I'm going through and saying, but wait a minute, I didn't think Victoria's Secret was a business expense. The tobacco or the alcohol, we're probably not going to.
I had a client try to pass off his wife's $50,000 Tiffany engagement ring as a business expense. He's like, "You're kidding." I'm like,
"Tell him
no.
to call me." Yeah, hey, I need one of those.
Yeah.
$50,000 ring wouldn't hurt.
That's on the level 10 of the aggression scale. Back it up, buddy.
It was a legitimate expense associated with the merger of their operations.
Fair, Mike. I like the way you're saying.
Aggression level 14.
That was the attorney showing Mike.
Yeah. I don't advise anyone to use that kind of approach.
We all end up in jail together.
Right. That's right.
Pass.
Oh, goodness.
That's too funny.
Well,
I think that is in line with what I see a lot with businesses is their bookkeeping. Like,
yes.
Everyone is just like, oh, I can just learn QuickBooks real fast. No, you can't. You're running a business. Like, cut it out. Like, hire somebody to do it. It is not going to break the bank to have someone do your books. And so for me, when we're doing debt resolution for people, if I'm dealing with a $500,000 account or $1 million account, they want to see financials. Like, I need a profit and loss. I need a balance sheet. I need something I can show that there is an actual financial hardship. And when businesses are like, oh, I don't have any books, or worse, what is that?
No, I do. I see it. I actually was contacted by a property broker because he was working with a client who has an existing business that's doing fine. But when we went into COVID, they were highly impacted. And so she wanted to sell the business. And actually, she wanted to sell the business before COVID, but then we hit into COVID right about the same time. And so he told her he needed a P&L, a profit and loss statement. He needed financials. He needed to see what was all about. And she was lost. She really, truly was lost. She did not understand any part of that. What she knew is she had money in the bank. She was making money at the shop, and she was spending a little less than she was making, but she didn't understand anything about about valuing the business, about what it would take. What else am I going to need? So we had to go in and structure and get the P&L and get everything set up for her. And then she wanted to know, okay, so now is this what I'm going to base the cost of my business on? I said, oh, let's back up again, because we need to talk about a whole nother subject here. And it's just, and I'm not criticizing her. I'm just saying that she didn't have any idea. No one's ever been there for her to help her, to advise her, to work with her, and to say, yeah, I understand. And I think probably, yes, I understand. Let's see what we can do to fix it, are the words we all need to practice. So,
absolutely. Well,
yeah.
Suzy, it's interesting. You mentioned two things in that bit that we covered in our last podcast. One was the commingling issue. That was part of our LBL moment in the last episode, I think it was. We see that all the time. We both do. And I think it's something that everyone who provides professional services to businesses just perpetually cringes at. Of course, you're not legally required to have separate banking for your sole proprietorship, but you damn well ought to. I mean, geez, is this a business or isn't it? Just go open a bank account. And I even mentioned in the last show, the experience as a banking customer is better when you have commercial accounts, even if you don't have much money in the bank, even if you've only got 4-figure balances. They treat you like a much more valued customer when you have business accounts. It's just worth doing. And there's no excuse really for continuing to commingle funds. It results in all kinds of issues that can be difficult to explain yourself on later, even accidentally. And then you were just mentioning the issue of valuations and getting books in order when people want to sell. I run into this pretty regularly on small business purchase or sale transactions where I'm representing one side or the other. Either someone's buying a business and they just can't get a clear set of financials out of it. Yes. Like they just can't get it, and they end up just producing a box full of bank statements, and the deal falls apart. Nobody wants to buy that. Come on. It's not worth it. Or on the other side, people want to sell and they don't know how to value their business, and they don't have data to value it based on because they just haven't really been keeping those books. But it's not that hard to get it in shape. Going to somebody like you, Suzy, or you, Shauna, for I would guess probably a few $1,000, depending on how much work it is, you're going to be able to get them in order with a good set of books, a working QuickBooks system, most likely, with current P&Ls. And then it's much easier to look at that and throw a valuation at that business. Usually you can get a pretty decent understanding of what that's going to sell for. And I mentioned on our last show that anyone who's planning on selling their business really needs to plan for that in advance. You need to have your books in order, and you need to be working with tax planning people long in advance, because as soon as you make that decision that you're going to be selling this joint, once you know that this business is a product, then the business is your product. You're no longer selling your widgets, you're selling a widget factory. You're no longer selling your time doing personal services, you're selling a personal services business. And therefore, you need to optimize your books. You need to optimize your operation in every way so that 6 months from now, a year from now, when you're getting into a deal, everything looks really great and the valuation by all appropriate valuation methods is jacked up as high as you can get it.
Right.
That's what you got to do. And it's worth paying people like us and people like you, Shauna and Suzy, to get that in order, because, man, we are cheap compared to the increase in value of your business that you can get when you go sell it.
Very well said. Very, very well said.
Like we're talking the difference between not being able to sell at all and having a retirement plan.
Exactly.
Yeah. A couple million sitting in the bank.
Exactly.
So one of the things I'm smiling because we actually have a negative consequence on you selling your business. I'm going to throw that out there, right? If you work with somebody like me, my entire job is to make you look poor, completely poor. That is my entire job. So you have to be working with, if you're working with somebody, you know, a strategist like me, right? There's only 607 of us in the country that do what I do. Okay. If you're working with somebody like me, you have to be working with a really good bookkeeper and a really good CPA, because we have to be able to explain to that CPA, listen, yes, we're moving money from this pocket to this pocket. The money isn't going anywhere. It's still a part of the overall value of the business. So just because it looks like an expense over here, please don't devalue the business, right? This has to be looked at as an entire portfolio, not just one single little viewpoint, because my job is to make you look like you make nothing. So
that's a really good point. And it's something that I didn't get into in the last episode in detail. And I think it's something that people think that maybe only the super wealthy do that sort of thing and get into that kind of tax planning. Nah, if you've got any real assets and any real income, then you ought to be working with somebody who will make it look on paper like you are as unsuccessful as possible. Your business should look like it's just on the verge of bankruptcy and that you're hardly getting anything in the door. That's the goal. But then when you decide that you're going to sell, you're walking a very fine line between maintaining an appropriate tax structure to minimize your tax liabilities versus looking good on paper to potential buyers. And you can get into a trap where if you're working with buyers who aren't sophisticated enough to appreciate what they're looking at, they may not see the value in your business. And you may end up having to make some changes to the way you handle things and incur some higher liabilities in the lead up to a sale in order to pump up the apparent value of your business. It's just a huge, complicated balancing act between tons of different factors and a whole bunch of spinning plates on a stick on your nose. It's like a circus.
Yes. Where I see it the most is, when people have a business and they are enjoying not paying a lot of taxes, but they want to buy something. Like they want to buy a house, they want to buy a boat, they want to buy a second property. Well, you don't make any money on paper. You have no income. So no, you don't get qualified for financing. So, it's kind of a fine line when you're dealing with this kind of stuff. Like, you can't just have one strategy and it always works. Like, you need to know what you're doing. You don't even have to know. You have to ask the person that knows. Like, you don't have to be the pro. There are pros happy to help you.
Yes. And of course, what's screaming in my mind is, this is why you set up your own bank. Because there's ways to do that. You don't have to go to another bank. You set up your own bank. You buy your own damn boat. Problem solved. Sorry.
True.
It's true.
Sorry.
Solid advice. And if you're one of those people that's like, how do I do that? You need to just call Shauna.
Yep.
Yes. You do.
Go ahead.
No, go ahead.
So when I deal with people, I refer a lot of people who have no books. They're not really sure where to start, to Suzy, right? Because they're really friendly. They're very nice. They can get you up and running. Your back taxes filed. Very friendly, very stress-free experience. And dealing with those types of tax issues is very stressful. So having someone to just smooth it out for you, that's why I go to Arizona Tax Advisors. When I've got a high-end client that, is making mid-six figures, they go to Shauna. Because they need tax planning. Like, they need to be able to keep more of their money so they can retire properly. Just because you make a bunch of money means that you're probably paying a bunch of taxes. And sometimes it's not worth it to make more money when you make less money because you're paying higher taxes. So, just pay attention to your pay stubs. Like, pay attention to your bottom line. And if you don't know what your bottom line is, then you need to start with Suzy.
Yes. Call me. We'll talk.
It just goes back to the conversation. You have to have all the team members on your team, all of them.
Yeah.
As a business owner, if you are building a widget factory, you cannot build the widgets and do the sales and do your books and do your taxes and do your strategy and do your law stuff. And really, you'd never sleep, and none of it would ever be any good, right? Because you're not trained in all those things. Okay. So definitely have your team, all of them.
You're not going to sleep anyways, let's be honest. But,
sleep when you're dead, all the good bits. So.
But you got to have the team for sure. Absolutely.
The other thing I was going to throw in here is, life happens, and we can have the best plans in place, the best strategies in place. We can be building a business. We can have a great service business. We can all of these things. And then let's think, maybe something like a COVID hits, a pandemic, right?
Absolutely.
And it can kind of change everything. And even if it isn't a pandemic that's affecting the whole world, maybe it's a change in our family structure. Maybe it's, just what a medical situation. We have to be able to turn to somebody and say, what do I do now? Because none of us has all those answers. So whether you're dealing with millions of dollars or you're dealing with your W-2 salary, it matters that you have someone that you can talk to.
Absolutely.
So, yeah.
And it's important to emphasize all of these things change continuously and require constant reevaluation.
Yes.
Suzy, you mentioned life happens. It does. And out of COVID, I know, both through my clients and also through our own business activities, a number of industries have been completely shaken up in terms of difficulty of acquiring new business, the cost of advertising in certain sectors. I know in law, there are practice areas that previously you could pretty easily break into and develop a small-time side practice in some certain areas. And everyone tried to do it simultaneously as a result of COVID because their main practices weren't going so smoothly. And as a result, the cost of advertising and the cost of acquiring new leads and clients in those practice areas became totally prohibitive. Meanwhile, the conversion rates went totally down the tubes because everyone was competing for the same pool of clients. And it happened over a course of just a few months. And this is like 5 or 6 major practice areas. everything just got shuffled. And that's not limited to law. That's happened with tons of different business areas. So being able to adapt to that, or at least being able to make a quick decision to exit something or to not go a certain path is very important. Lots of people have a tough time making quick decisions on big things like that, but you got to stay adaptable.
You know, one of my favorite things to do in business and I think in life is brainstorming. I love it when you can get minds together and you can sit down and you can start talking about whatever the problem or situation or goal or whatever it is, and then let people just freely bounce their ideas around. And to me, that can be so very productive, regardless of what the situation is. And so I so value my fellow professionals and then just, you know, the people that I've met through like Chamber of Commerce and that kind of thing, because it opens that window or that door to be able to do more of that. And again, as business owners and people, we need that.
Absolutely. Very important. The idea of sitting down with your team and brainstorming, although these days it won't be a sit down, it might be a conference call or a Zoom meeting. But doing that makes a big difference. I've been strategizing with a number of my clients, working with their real estate people, working with their tax people to come up with approaches to handle rapid changes in their business and their industry. Lots happening right now.
It's pretty nuts. So what are the top tips that you would give someone in our last couple of minutes of the show?
Ask
Top
questions.
Ask
Ask
questions.
Questions, more questions. Talk to everyone. You talked about masterminding. You talked about speaking to other people. Just talk. Just ask questions. I think, honestly, one of the things that I was totally surprised about, Facebook groups of all things. Okay. Hey guys, I'm thinking about this, or I have a question about that. You will get 200 or 300 people with their replies, with their thoughts, generally trying to be pretty helpful. I mean, you're going to get some trolls, right? But like generally pretty helpful. I was honestly shocked that Facebook turned into such a supportive environment because of COVID, I think. So just questions.
Very good. I would agree in terms of the Facebook climate on some of the business groups. People have really started to pull together and are being more helpful and perhaps less antagonistic than they were in the past.
They're all in this crap boat together.
What do you think?
Well, I love the ask questions because I'm all for that. And I would add to that, ask sooner rather than later. And the other thing is, remember, everybody has their story. Everybody has a story to tell. And when people come into my office and I am privileged to hear their story and what's going on in their life and what their dreams are, to where they want their life to go and all of the above, it is such a huge blessing to me. And it also helps me feel a little more okay about being me, because we all have our story and, you know, it's okay. And I guess that probably be honest, be as open and honest as you can with your accountant and your attorney. We're working for you. And so we are the people that you need to be 100% completely honest with so that we can help you not get in some of those life happens situations that we can, you know, that you can avoid. So I guess that would be my input there.
Excellent.
It's so true.
Absolutely.
Sometimes people feel a little embarrassed about their situation, but it's like, you're already here. You've already done the hard part of like reaching out for help. Generally, these types of meetings would be no judgment zone. Like the whole point is to fix the problem. And the only way to fix the problem is to know what's really going on. So, you know, if you're in this boat and you're thinking, oh, I need to talk to Mike, or I need to talk to Suzy, or I need to talk to Shauna, leave your shame and embarrassment at the door and like tell exactly what is going on. It's like we've heard it all before, and I assure you we've heard worse.
Oh, yes.
You are not worst case scenario. So like, just do the thing.
Absolutely.
Right. Agreed.
Anyway, that wraps us up almost for today. So in our final minute, Suzy, please tell our listeners how they can reach Arizona Tax Advisors.
Oh, wonderful. Well, give us a call, 602-274-7770. Reach out to us by email, and it's really a tough one here. It's Suzy, S-U-Z-Y, as you can see on the screen, at ArizonaTaxAdvisors.com, or go to our website, which is just, ArizonaTaxAdvisors.com, you're going to find us. We're going to be there, and then reach out. We're so happy to help.
Awesome.
Excellent.
And the tax goddess.
Mine's super easy. TaxGoddess.com. You can book an appointment. You can talk to me. We got a whole team. Call me. Let me know what you need. We're on it.
Excellent. And I'm Mike Poulton with PN Law. You can find us online at www.pnlaw.pro or give us a call at 602-427-5613 for business law and business litigation needs. Rochelle?
Yeah, you can find me online at xfirmlaw.com or azonit.com. Happy to help. And that is Lawgitimate, the end of tax traps. Thanks so much for listening, and we will chat with you next time.